How's it, guys? Welcome back to FX Rhapsody. Today we're talking about the British pound, US dollar, and also then the British pound, Japanese yen. Before we hit the charts, just go to the description. I've got a preferred broker there. Just go try these guys out. You know, you always want a reliable broker, people that will look after your money and your trades as well. These guys are brilliant. Amazing spreads, supports, margins, whatever you need from a perfect broker. Go check them out, try them out, and then thank me later, guys. Okay, so let us start off with the British pound, US dollar. So on a daily time frame on the British pound, US dollar, what we can see is this downward movement of price. You know, but price is currently hitting a bottom there. But first thing is first, let me draw this trend line in for you, around about there. Just want to show you how this is being respected. And then also, you know, some liquidity was taken out at this bottom here. I just want to do it straight. Okay, so basically we have, let's just do it better. We have this area at the bottom. And we have this trend line. So we have this formation forming. So price came, took out liquidity, because what happens below these buy orders here, there is some sell stops. Sell stops being hunted by price action, around about there. Let's just make it another color so you can see clearly. There we go. That's your sell stop area, price hunting that sell stops, and then going up again, respecting that trend line, coming down. So we have this area where price might just break out to the upside, you know, break that trend line, come back, retesting it in a way, then moving up to the upside maybe, because we are seeing a double bottom forming on a daily. So it's a good indication that price might be starting to change momentum and move to a bullish movement. But again, you know, it's not certain. Don't predict it. This is just what I'm looking at. Just react to what the market gives you. Let's move on to the 4-hourly time frame. Okay. So on a 4-hourly, let's just do that. So you can see this little, it's still a, I want to see now where, there we go. So we have an area at the bottom, obviously, where price is hitting. Price is hitting that area. Let's expand it a little bit. And then we have this area over here. That price is now coming back to retest. Then if you pull your Fibonacci out from this low, where price started breaking out to that high, you can see price coming nicely and tapping into that 62, where this previous resistance turned support area is acting as, or is lying straight or nicely on that 62%. So now this is a key area where you can place your buys, or we can just wait and see what price does. Maybe it will start breaking down and just come and retest that bottom again. Again, just guys, if you place a buy here, because this is, like I said, a higher time frame, this is a huge stop loss. So yes, you get your swing traders that does that, but if you follow my rules and then you buy on the 62, leaving a stop loss just below the 100, that's the 67% stop, 67 pip stop loss, a bit big, but you get guys doing swing trading. That's what they're waiting for. So just be careful when you place your buy orders. Currently it looks very promising for a buy, but again, let's just see what the market does. On an hourly time frame, relatively the same thing. What I want to show you is I haven't shown a lot, or haven't made a video about this, and so this is still coming. But okay, let's pull out our Fibonacci from this swing low to that swing high. So you can see price coming and retesting that 62% area. Now over here, we have a break in structure. Okay, so you can see this area being broken. So it was acting as a resistance, and then price broke through it. Now with that break in structure, you have this gap that was, let me just delete that. So you had this gap that formed. Now this gap is called the fair value gap. Now, like I said, I'm still going to do a video about it. So I'm just going to highlight it from that tip of that candle to that tip of that candle. And you can see price action hunting that fair value gap and going into that fair value gap. And that's also a very nice entry point on the market for you. So it's from that tip to that tip, price coming up, hitting that fair value gap. And this is where you could place your buy. Now currently price is hovering around here, just consolidating towards the last end, last bit of the end of the week. So again, let's see what happens this week. Will price carry on to the upside, or will price now start moving down again, you know, breaking that area, hunting price action? Because you have got all this liquidity lying at the top there. Liquidity was taking out at the bottom, but again, you know, let's wait and see. Go to the lower time frames, exactly what I did now with the fair value gap, with your Fibonacci. Just go trade it on the lower time frames on your 5 minutes for a nice little bit of a entry on that. Let's move on to the next pair, which will be your British pound, Japanese yen. We start off on a daily. Now with this pair, I mean, same with UJ, you know, price just moving up to the upside. Yen getting a little bit weaker. So you can see, again, liquidity. You can have that liquidity thing over there. And then let's just do that and change that color to black. We can see a little bit of a structure being broken. There we go. So the high was taken out and price tapping into that liquidity. So now what is the next move on this pair? So by tapping liquidity, have it, you know, is that what price action was meant to do, and then start coming down to the bottom, or has it just gotten more momentum to carry on, you know, carry on with its bullish trend? On the 4 hourly time frame, just want to zoom it out a little bit so you can see that's the area that I was talking about. Around about there. I'll zoom it in for you now, just pulling it up. Okay, so you can see on the 4 hourly time frame how this area was tapped into, going down again, and then carrying on to the upside. Again, price tapping into that because structure was there. Price broke through. You have this area of that fair value gap area right about there. You see price tapping into that and then moving to the upside. If you were trading the 4 hourly using that method, you know, and then you, putting in a nice trade of about 100 pips, what you do is you leave your stop loss just below that area, so stop loss wasn't taken out. But again, swing trading, you know, requires a lot of times requires huge risk, and then for huge rewards. So it all depends on your lot sizes and all that. On a hourly basis or hourly time frame, so what we can see is price moving up and down, up and down. Now, if you take your Fibonacci, you will see that price not hitting that 62% area over there as well. That's the first little one, you know, it missed that. So it's a case of, you know, where do I place my trades with this movement to the upside? Again, you can see not that 62% not hitting it. So how do you, you know, benefit out of this bullish movement? Now, again, this is coming back to, you know, a video that I will still make. So you can see this previous low or previous high being broken by this huge candle over here. Just expand this a little bit. By this candle, you can see this fair value gap forming. Fair value gap is going to be from this tip here to that tip of the candles. I'm just doing a rough explanation on it. We'll go deeper into it on a later stage. But again, price coming, tapping into that gap. What you do is just leaving your stop loss just below that area. So you tap it there. You know, stop loss going to be there, or you can just leave it below that previous low. You know, this one going into a little bit lower, so it's a 12 bit stop loss, and then you can see price, you know, being right or written out. Same scenario over here as well. price going up. That's your previous high over there. There we go. You can see, let me just take this out. You can see this candle tapping into it, coming down, but you can see a big bullish candle pushing through that area, leaving that gap over there as well. And again, that area, you can see price coming, price action hunting that fair value gap area, and then going to into that, moving to the upside. So currently what we have now is, let's just take this out. So currently what we see is, we see this area of resistance. Like I said, it was broken. So you can actually, you know, that's the previous high that was broken again, being retested. Okay, it's being retested multiple times. So now, do we see, or will we find price breaking this area over here, coming down, retesting that area, you know? So we need, that's going to be your low. Okay, so this is going to be your low area. Now, if there's going to be a movement to the downside, we want this low to be broken. Okay, this low area broken by a big bearish candle coming up, filling a fair value gap or an area, and then moving to the downside, because if that happens, we will have a lot of targets. We'll have that target over there, which will be liquidity lying over there, price action hunting that liquidity. We'll have another target, and we will have all these targets at the bottom, you know, and there as well. That's all liquidity lying there. So we will see if price breaks that area, if it makes a move to the downside and it comes up, and then it carries on to the, you know, carries on with a bearish movement, we will see it hunting all that liquidity over there, going down there and going down there. But again, don't just predict, don't just go and sell, because we will still see some movement. We might still see some movement going up into that bullish movement of this pair. So let's see what this week holds. You know, like I said again, and I keep saying it, don't predict the market, react to what it's doing. Go down to your 5 minutes time frame, you know, the lowest one you can go, or that you are willing to trade. You can even go down to the 1 minute, and just wait for those setups to happen. Be patient, you know, just know what you want to do, stick to your plan, and then don't just overtrade. Don't be impatient and just jump into a trade. Just patience is key in trading, guys. Otherwise, you're going to lose your money. Guys, I hope you are having a wonderful weekend, and don't forget to hit that like button, the subscribe button, that notification bell for more analysis, more strategies, more videos coming your way. And yeah, I'll try and help you as much as I can. So again, comment in the comment section, let me know what you think. Guys, I hope you're having a wonderful weekend. Stay safe and happy trading, guys.